Hey everyone, welcome back. Today I want to answer the question, will Bitcoin reach $100,000 per coin? And when do we expect this to happen? So if you've held Bitcoin for the past year, you've done pretty well for yourself. You're up about 130% on your investment from the July lows, right around $25,000 per coin. Today you can buy a full Bitcoin for about $64,000 a coin. As a reminder, you do not need to buy a full Bitcoin. You can buy Bitcoin in any denomination that you choose to do so. But from here, we're looking at about a 57 to 58% price increase in order to reach $100,000 per coin. Very, very achievable in this space, but people are seemingly getting pretty bored in this sideways price action that we've seen over the past couple of months. So when I think about the next catalysts that are going to go into the next leg up on Bitcoin, the first catalyst that I think about is government spending. When the government spends US dollars, everything that's denominated in dollars is going to go up in price, whether it's real estate, stocks, or Bitcoin. Here in the United States, we just passed a milestone. We're now $35 trillion in debt as of this week. So per person, that's about $104,000 per citizen. Just to service this debt, it costs over $900 billion per year, about the same amount that we spend on our entire military industrial complex. So this chart, this website gives me all the confidence in the world that Bitcoin is going to go up in US dollar terms for the rest of our life because the US government will not stop printing money. There is no other way out of this situation except to continue to print money, and they're very good at it. This is a M2 money supply chart, or the total amount of US dollars in circulation since 1960. And this is another chart that just goes up and to the right. You'll notice an especially sharp spike in 2020 when we printed a lot of dollars. It curves off a little bit afterwards when we decided we need to try to get inflation under control. Inflation is still running rampant. The dollar is still devaluing, and we are still printing money. The consequences of this money printing is a weaker dollar over the long term. The more dollars the government prints, the less valuable each dollar is. The more valuable each asset that is denominated in these dollars becomes. So it's not necessarily that your house or your stock or your Bitcoin is that much more valuable. It might just be that the dollars that are denominating it are going down in value. So the US Federal Reserve really has control over two main things: interest rates and money printing. So if the Federal Reserve is increasing its interest rates and it's not printing money, that is called quantitative tightening. If it's printing money and it's lowering the interest rate, that is called quantitative easing. And over the past couple of years, we've seen the fastest quantitative tightening cycle that we've seen since the last financial crisis around 2008. We're now at a Fed funds rate of about 5.5%. The government cannot sustain this path. It can barely afford to service the debt that it already has. It is absolutely going to have to cut interest rates very soon. We just had an FOMC meeting today, July 31st, at around 2 o'clock Eastern time today, Federal Open Market Committee. The next one is going to be September 18th. So don't take my word for it. 100% of the market thinks that we're going to get an interest rate cut on September 18th. 86% of them think that that's going to be a quarter of a percent. 14% are even more bullish, thinking that it's going to be half of a percent interest rate cut. When the government cuts interest rates, there's more money in the system. Everything denominated in dollars goes up in value. September 18th, the market is projecting an interest rate cut. Everything in dollars should go up in value. The second catalyst that I think about when I think about the next leg up on Bitcoin is its stock to flow model. I could do a whole video on stock to flow, but real simply, it's used to price commodities. Any commodity. It could be wheat, corn, oil, gold, or Bitcoin. It takes the total existing supply and divides by the annual new supply. And since with Bitcoin, these numbers are extremely precise, it's very easy to build out a model. You could build out this model all the way to the year 2140 when the last Bitcoin will be mined. But what's super important to realize here is that the actual price of Bitcoin is highly correlated to its stock to flow model. Very, very close. It's a very good model. On the y-axis, you'll notice that these are not going up in a linear fashion. This is a log chart. So the changes that you're seeing here are actually much more dramatic than they look on this chart. And according to stock to flow, we should already be at $100,000 a coin. And if history repeats itself, we will be right at stock to flow price very, very shortly. Just to give you an example on stock to flow, something that's more relatable, like gold, about 187,000 metric tons have been mined of gold. We mine about 3,000 tons annually, giving gold a stock to flow of 62.3. The higher this number is, the more scarce that asset is. But with gold specifically, we have the problem of running into too much of it at the bottom of the gold. Or what if we bump into an asteroid that we can one day harvest that's full of gold? What is that going to do to gold's price with a sudden supply shock onto the market? With Bitcoin, it's a very precise amount of new supply every year. It can be calculated, and we know that there's a fixed supply of 21 million Bitcoin. There will never be more than 21 million. And so far, we've mined 19,777,169 Bitcoin. And you take the annual flow by just taking the block subsidy every 10 minutes, you'll get a stock to flow of about 120.41, meaning that Bitcoin is a more scarce asset than gold, and we can project its price out with a high degree of accuracy. The third catalyst I want to talk about is the Bitcoin Spot ETF, or the Exchange Traded Fund. This is new just this cycle. It was approved January 10th by the Securities and Exchange Commission. Anyone can now buy Bitcoin anywhere they can buy a stock. So this is going to help with institutional adoption, nation state adoption. And since January, we've seen over $17 billion of inflow into this type of asset. Keep in mind, all of Bitcoin is about $1.2 trillion, which is a drop in the bucket when you look at things like real estate, bonds, and gold. So when we have $17 billion flowing in less than half of a year, more Bitcoin is being bought than is being mined. There is a much higher demand for Bitcoin than a supply of Bitcoin. So the ETF is not the route that I'd recommend anybody goes. It's really for specific use cases like nation states, like government funds, like things like institutions that need to go this route or for tax reasons. So you're much better off buying Bitcoin and holding it on a hardware wallet like the Blockstream Jade, but the ETF is going to give us access to the deepest capital markets in the world. If you go this route, I would recommend using BlackRock's. The ticker for that is IBIT. But here you can see all of the Bitcoin spot ETFs. So just to recap, three catalysts here are government spending. It's inevitable. The Federal Reserve is going to cut interest rates in September. They have to, they can't afford not to. And then the Bitcoin spot ETF, bringing more liquidity to this space than we could ever imagine. So I personally believe that Bitcoin will surpass $100,000 per coin in 2024. That's my opinion. Do your own research. But Fidelity predicts $1 billion per coin by 2038. Chamath predicts 500K by October 2025. Max Kaiser is predicting 200K by just the end of this year. A more bullish bet is Michael Saylor last weekend at the Bitcoin conference in Nashville. His bear case for 2045 is $3 million Bitcoin. Now, this would be Bitcoin just absorbing 2% of assets. His base case is 13 million Bitcoin. His bull case is $49 million per Bitcoin in 2045. This will not be the same 49 million that you think today. The US will debase its currency by a lot before then, but still $49 million per Bitcoin, I'll take it. And in just next year, if you hold Bitcoin and you buy it now, you should be able to trade one Bitcoin for a Lamborghini. I would not trade such a precious asset for something so silly, but by this time next year, you should be able to buy yourself a Lambo. So if you found this video helpful, please like, subscribe to the channel, and I will see you in the next one.